Hi, welcome to the Market Alert for the 1st of July, Friday the 1st of July. This is going to be a long one. There's a lot to cover today, so just so you know, get yourself a cup of tea. And we'll start off with the news. Stocks, cryptos tumbled to close out catastrophic first half. As we saw the markets moving lower yesterday, 10 yields tumbled back below 3%, so that means the Feds are secretly buying bonds. Stocks slammed because of it. Welcome to the recession. Atlanta Fed slashes quarter 2 GDP to 1%. Minus 1%. And oil rebounds as OPEC confirms expected supply hike. And the war drums are being banged, aren't they? UK to raise defence spending as NATO chief warns of danger of, this is what I don't like, full-scale war with Russia. And obviously if NATO is involved and we're part of it, I will say no more. Economic news today, we've got CPI for the Eurozone. They're absolutely screwed. There's no way they're going to be able to raise rates. I did actually see a news item. Let me just see if I can find it for you before we just move on. Okay, here it is. ECB will buy Italian Greek bonds using proceeds from German French bonds to avoid crash. And like I've said before, and I'll say it again, they can't raise rates in the Eurozone, because the whole system will fall apart. And now we have the confirmation there from the criminal herself, Madame Lagarde. And 3 p.m. ISM manufacturing, this is also forecast to be lower as well. Gold silver ratio, well, rocketing up to the upside. You'll see why if you've not already looked. We're at 90. We're going up back to the 120 level, and I'll show you why I believe that this is going to be the case when we look at the silver market in conjunction with the US dollar. So today's market alert is going to be slightly different. I want to show you the trades from yesterday. And if you recall from yesterday's market alert, I actually marked up the target area in the S3, and I drew this amber orange coloured line on the chart saying this is likely where the market could trade down to if it moved to the downside. Well, it did, and this is what happened. So yesterday morning we see the market moving to the downside there, and I'll just show you the trade in progress there on the left. You can see this here, and then price is trading down to the S3. And at this point, I've switched to the 1 minute chart, which you can see there in the S3, because if you recall, if you go back and have a look in that alert yesterday, I said 99% of the time the market will stop at the S3. So what I'm doing here is watching the volume now in the 1 minute. I can see it's oversold. So when it gets down to this level, I'm going to take the profits off the table, because that's going to be the optimum point for this trade. And you'll see that happen in just a second. Just going to fast forward, and you'll see we just had another retest there, and as the market came back, I actually took the profits there, closed out the trade at this area. So I'm going to fast forward just to show you why the S3 is so important. You can see the volume coming in there. That's the 30-minute chart. I'm just having a look, making sure where we are. We're also oversold in the 30-minute chart. And then you'll see the market holding at this level there. You see it just coming back, having another look, which is what you get. And then you see them buying back in at this level. Now, what I do from here is watch the 5-minute chart, which you'll see in just a moment. I'm just going to mark up. You can see the buying in at this level as well. This is also oversold. And what I'm going to do is to mark up, see if the market will come back to the fib. So let me just mark them up here. I'm looking at the golden ratio of 62% and 78. And the market does just that. You'll see in the 1 minute now. So I'm going to time the trade with the 1 minute. I spoke about this yesterday and said I would get you an example. Now you can see we're overbought in the 1 minute chart. But in the 5-minute chart, we've barely moved off the bottom of the oversold conditions. So as I watch the volume now, I can see that they're selling. How do I know they're selling? Well, quite easy, because the volume is greater than the previous bar's volume and the range is less. So I know that they're selling, because if they were buying, this would move to the upside. So, and it's oversold. So at this point, I'm taking the punt, because in the 5-minute chart or any chart, you're likely to get a pullback before you get a move to the upside. So I'm just going to try and grab a few points as the market comes back. When you understand the flow of the market, there's the 62% hit. We're not even moving off the bottom of the oversold conditions. So the market, like I say, is likely to do this before it moves to the upside, if it moves to the upside. And I have other rules which are in the course that if it continues to the downside, then fine. But here I'm showing you how I used 3 time frames, the 30-minute, 5-minute and 1 minute, having looked at the daily to start with, got the full background of the market, know where I am. And then I can trade this to the downside. So you'll see me there just moving the stop to break even. And the market gets down to the 78% retracement. And as it does, I'll say thank you very much and take the money off the table, because there is a chance that the market will move to the upside. Now, the other issue I have here, we've got the S3 and the low where the market saw the buying coming in with the demand there as well. So just in case we get that spring back, I'll say thank you very much and take the money off the table, which you'll see there I do. And then the market bounces back. I do a couple of other small trades in between this as well. There was 4 trades in total, and you'll see there obviously it was 100% on there, because I knew before going into these trades what I was looking for. That's how the pattern of the market is. That's the foundation of the trading strategy, the repeatable pattern. I just then trade the probabilities. So here you can see that it was successful. I then continued to trade through the rest of the day as well. And if you'll notice, if I can find it on here, it's not on this one. Let's move to back to the charts. There's the monthly statement. That's what I was after. Closed out trades. So you can see that we're getting close to 20,000. If you go to the member section, you'll see the 170% increase on the account. And I thought, oh, we're getting close to 200%. So what I did, I'll just move back to the other chart. Just 1 second. So the end of the trading session, managed to get the balance over 30,000 there. That's not total, because obviously we've got losses, etc. But I'll show you that in just a second in the main summary. But here you can see that yesterday it was another day of profitable trades, no major drawdowns. And also here you can see on the for the week, this is the week, so 16,761, 6.31 for the week. Average trades for the week 70 to 30%, but over the long period of 19th of January to the current date, we're still looking around 54% to 46%. But it doesn't matter, because the equity curve is in the right direction. So there we go, up to speed with what we got so far. Let's have a look at the markets and see where we are now. There's been a lot of movement overnight, particularly in the metals, getting absolutely hammered. And this is the only news item I can find of what's going on at the moment. Putin's swoop on key gas plant could force foreign partners out. So again, like I say, the war drums are being banged now, wherever the article was. This is actually quite worrying, I have to say. All of this week, it's been about NATO partners building forces, sending 300,000 troops. The US supplying Turkey with F-30 or F-16, F-35 fighters, whatever it is. It's starting to look very, very worrying, which is also very odd that they're actually crushing the price of gold and silver. But we'll get to that in just a moment. So let's kick off and have a look at the Dow. So here we go then. Yesterday the market down, trading to the 78% retracement, having traded through the 62% retracement. And you can see overnight prices also moving lower as well. We were overbought, so we're now heading to the downside as well. So watch the 89% retracement here as well, and also this low before we attack this low. The Dow is certainly stronger than the DAX, which we'll look at in just a moment. And yesterday afternoon, I think we had a bit of plunge protection team activity here as the market was moved up. We then see an 89% retracement overbought, and then the market making its way back down towards yesterday's low, which is very interesting. Overnight, prices moving down sharply. In fact, let's just have a look and see how much we've moved down off the high with this news. So low to high, 345 points on the Dow overnight. In the German DAX, you can see it's far weaker. It's taken out the low of the last week, whereas the Dow hasn't got anywhere near that yet. No surprise, really, because obviously Europe is going to be the focus with, like I say, the war drums being banged now by politicians. Yesterday's low is going to be crucial for the DAX to hold. If it doesn't, then we're going to move low. We've already taken out the 89% retracement and the low of 12,837. These are the things that I used yesterday to make the profits and get above that 200%. In the 30-minute chart, you can see that we sold off all the way down to the S3, and you see how the S3 and the orange line is still there where the market actually held, and we had a retracement there, double bottom, before the DAX followed up with the Dow. Overnight, again, got the retracement, drop off in momentum, and the market down back to the orange line. This orange line is worth keeping an eye on. It's going to be 12,646. That comes from the monthly chart, doesn't it? If I remember rightly, or was it from the weekly? It's in this one or the other. Anyway, while I'm in the weekly, now you can see we've just broken the 89, and the 12,419 is the next downside target there. But just going back to the monthly chart as well. Oh, it's 672. There you go. That's where it is. Let me just check that. I either got the wrong number there. Let's just have a look. 672. Yeah, there we go. So yeah, the S3, and there it is. Yeah. So that's right. I put it down at the 1250 yesterday, didn't I? Or the 50. What was that? 12650 yesterday in the alert, and that's why I used it, because it was easier to remember, as you can see, than the 12672. And of course, we had the S3, which I say is a really powerful target there. Anyway, the 1250 is going to be crucial. If that's broken, then we're heading down to yesterday's low of 12616. In the S&P, we got 62%, where the market's just coming through. Yesterday, the market going through this, but being salvaged and supported by the plunge protection team. 78% is the next downside target for this. Obviously, it's got to take out yesterday's low. If you look at the 30-minute chart, you will see that down at 3737. Bit of a bounce there at the moment, as you can see, and the reason for that is that we will have a 89% retracement, and there you go, bang on it. You get used to seeing these areas. You don't actually need to draw the fibs on. You can just get used to seeing where the market is likely to stop. And once you use the bigger time frames as well, it makes a big difference, as you've seen in today's alert. Always know the background of the market you're trading. Get it into your memory. Know exactly where everything is. Understand the personality of it, and you can trade profitably, even if you're taking losing trades, because you know exactly where you are. And in the FTSE, we can see that this is at 62%. Yesterday, market bouncing off this. Again, still looking very strong compared to the lows of last week and the week before that haven't been taken out yet. So the FTSE holding up well there. And in yesterday's 30-minute chart, obviously crumbling with the DAX to begin with. This trading down to the S2, I think. I don't see an S3 on there. No, trading down to just the S3 as well. Yeah, it is the S3. And then the market rebounding with the Dow, of course, and then overnight also coming back. Watch the low. Very important for all of these markets at the moment. And in the currencies, well, the yen has come to life overnight, and that's why I went looking for news items, and also the fact that all the stock markets are down and the metals. So I wanted to know what was going on, and obviously that Putin headline is the only thing that I could find that would have an effect on the currency. So you can see that the yen is broken out of that sideways move. Horrible yesterday, just stuck in a sideways range, but overnight the market has dropped just 125 pips there for the yen, and in the pound, still stuck in the sideways range, not really being affected by this. Neither is the dollar either, which is bizarre. And you can see there, move up yesterday about 70 points to the R1 before it became overbought. Again, you've got your double top retracement and a down on the overnight. And finally, we're below $20, as I've said for the last few weeks, and I'm afraid we're going lower, much lower. If you go to the monthly charts, I have an order in at 19.18. I've discounted the $20, as I said I would do the other day. Let me just bring this up for you and change it to a monthly chart. And you'll see there that I've got an order in down at this level, which should lend some sort of support for the market. And the 200 MA is the reason for the chart, and it will be, of course, oversold by the time we get down to that level in the monthly chart. If we break this, well, it's we're going back to $13. I know it's insane, but that's what they're doing at the moment. I've never seen anything like it or witnessed anything like it in my life. The crushing of the metals prices, particularly when the US dollar was up yesterday and then was sold and slammed to the downside. They still managed, as you'll see, to keep pushing the silver market to the downside. It's just bizarre what's going on in this market. It is nothing but blatant manipulation. So think about it logically. Here we have the prospect of a major war. Like I say, the war drums are beating. And then you've got a situation of inflation. You've got the war. You've got rate increases. And yet the price of the precious metals are being crushed, and they're being crushed for one reason only, and that's so the banks can accumulate them, as they've done from 2010, plus the massive short position that JP Morgan have. If they didn't have it, then these markets would be way higher. Like I say, they were fined 900 million, as you saw the other day in the alert, and yet they're allowed to continue this criminal act. It is what it is. There's the 30-minute chart. Again, silver wanted to move higher, and then we get to the 1 p.m. fix, and bang, down we go again. That you wouldn't, if it wasn't being rigged, you wouldn't see that same pattern every day when the LBMA set the price. Unfortunately, gold has broken $1,800. 1786 is going to be the new low for this market. And there you can see overnight they've just slammed it. However, one thing I'm going to say now, I've been looking at this because I'm seeing this for the last 30 years. The market's slammed and bounced with a lot of volume. As they've done this in the silver market, yes, they have. So this is interesting. You might actually see this actually bounce back above $20 briefly today. Now they've done that, because that's a lot of volume to actually spike down. It's like they want to get others to go short, having broken that psychological level, and they may bring it back. So I'll be watching this closely in the morning session. And then finally, we've got crude oil. This again hammered yesterday and moving down on the overnight as well. But fuel prices, of course, are not coming down at the pumps. Well, there we go. That's everything for today. I know it's a long one, but I just wanted to share with you the highs and lows of yesterday, and the high obviously being the fact that we continue to make profits trading the German DAX very successfully by using the strategy of starting with the monthly chart, weekly chart, daily chart, and then working our way down to a 1 minute chart, Russian doll approach to trading. And then that way we can limit the risk, but we know exactly where the market's likely to go, and then trade the probabilities. Thanks for watching. See you in the next one.